Hi, good afternoon, everybody. And just a mic test. Can everybody hear me? Can somebody either respond on your microphone or you can type in the chat and say one?
Can hear.
Okay, thank you very much, Gary. Okay, once again, good afternoon, everyone. And today we're going to have a very exciting topic. That is the NAVIS business takeoff, the NBTO. And in this segment, we will get the chance to see what is the market direction for 2021. So it's going to be very exciting. And before we go into that, I want to steal a bit of limelight from Stuart. I'm just going to reiterate again for everybody for housekeeping. Number one is that please silence all your microphone. And if you can, please keep your videos on. I guess it's a form of respect for the trainers and the speakers. And then number two, that should you have any questions, you can straight away type it into the chat box here so that we can come to address it when we come to it. Okay, without much ado, I'm going to just start off very quickly by stealing the limelight from Stuart by talking a little bit more, reintroducing to everybody about the NAVIS training mastery. So quite a fair bit of so-called discussion and planning and work has been gone on to this segment. So ever since I've taken on this role, so what I'm going to do is I want to actually basically want to share with everybody the basis of training. Now everybody knows everywhere there's training, even in your ex-company that you work in, MNC corporations, you also have training. But the training principles here that we want to have it in NAVIS is going to be very different. Why? Because we want to make the training count and we want to make the training to stick to it. So to do this, we have certain principles, and the principles would be we go by the SMRT principle. So if all of you who is familiar with SMRT, taking the train, so you can remember the acronym for SMRT. So the number one in the basis of the whole training program, all the programs, is to give you the skill set. That means to say, for example, if you have something like the Project Apprentice, which is now the new name called NAVIS Project Mastery. Inside here, you will learn all the skill sets like the timeline, how to build a sales kit, how to do the financial calculations, and so forth and so forth. So we call this the knowledge. Okay, everybody needs the knowledge in terms of this area. Now, having in knowledge itself by alone is not good enough, because we always know that after a while, why is it that some of us actually so-called feel that we have lost the steam? We feel that we have lost direction. Then you start to, your mind start to have a lot of self-doubt, a lot of internal self-saying. So we want to incorporate part of the training called the mindset. So in the mindset training, we address all the no, as in the no. We learned how to say no to all the negatives, and then and how we can actually set our mind back and realign back and ground ourselves. This is very important. In our business, okay, we need to stay positive, we need to stay upbeat, because whenever our customers call us, they'll definitely want to talk to an agent or talk to you if you are ever positive. The third thing about the third principle is R, which is rehearse. Now, no point having the skill set and no point having the mindset if you're not going to put it into practice. So when you put it into practice, this is called the know-how. Now, first time you learn something new, it's going to be you're going to be a bit fuzzy around the edges. You know roughly what it is, but you can only become a master or mastery of the whole thing if you keep on practicing and rehearsal. So these are the things that we encourage during the training for as many hands-ons as possible. And last but not least, the T principle, which is technology. So the technology, of course, we have our link up, which is very strong. And from what I understand is that we're going to have a few more modules of link up coming up. Of course, they're going to be different names, but definitely they will be at your. These are the resources at your disposal. And with this, all this technology know-how, you combine this with the other three principles, you will be able to double your income. I'm quite sure of this because I've studied the so-called the training principles, how it is being applied to other organizations as well. And this is quite consistent. Now, when I say other organizations, I'm also actually talking about principles that are being taught in the US, all this, especially the United States, the so-called the gurus of how they actually go about it. So we glean from the best practices. Okay, so now the roadmap. So everybody wants to know how you can actually progress. So what we're going to do is we're going to start off with this whole series. We will call it the NAVIS Training Mastery from now on. And the roadmap, you start here. So the roadmap is in the orange color. You start right at the bottom over here. Of course, you got all those abbreviations, and to help everybody to be clear with the abbreviations, we have all the full explanations at the bottom. So you can actually get to progress from the bottom start here to NIM, NPWP, NRM, and so on and so on. So what are all these courses? Okay, in general, okay, um, some of you may ask this question, okay, must I really start here at the start here circle? Well, it depends on who you are. If you are just new to NAVIS, it means you just join in as to NAVIS as a brand new RES, or you just join us when you are from another agency. So the first one that you have to do is NIM, which is the NAVIS Ignition Mastery, is to really help you to kickstart and gives you a broad orientation to everything. So in terms of the market direction as well, you'll be covered, as well as what are the resources, who you can speak to, and the different sifu, the different masters in the entire training programs, so that who you can actually approach. Because each one of us, we so-called we spend and invest the time or to specialize in our own respective training notes so that we can best give you the support that you need. So if you feel that, of course, if you're already in existing in, already in NAVIS, you can skip the first step and then you can actually progress to the rest. Now, there's this course, this structure, this roadmap is designed in such a way that it has the structure in terms of the format, and yet it gives you the flexibility. That means you can move along the entire pathway up and down. So as long as you feel that if you feel that there's a shortfall, you feel that there's a need, you need to cover, you need to get good at it. So by all means, I encourage you to come and attend that particular segment. Now, once you finish the entire the roadmap already, okay, the design and the course layout is quite robust. I can very well assured that you will be actually earning much more after all these trainings. Now, let's say you want to progress further, just like a doctor. So now you study, you become very good at it. As you reach the last stage, you have gone for your attachment in the hospital. So now you're qualified, you are a doctor. So you want to specialize. And what do you want to specialize in? It can be orthopedic or cardiology or something like that. So what we propose is the next phase is the specialization. That is represented by all the red color hexagons. So the specializations would cover things like the landed properties, the HDB properties, the commercial industrials, as well as the so-called the project. Now, one interesting course that we want to introduce that you may not be aware of is called the NLEAD. The NLEAD is meant for leadership. So what does leadership cover is that we want to encourage. Now, all of us, we always say, please recruit, because we want you to actually get passive income as time goes on. This is the business model that we want. We hope that everybody can adopt, because after all, you can really be an agent until the very last day. So do you really want to do viewing until the very last day, or do you want to actually enjoy the fruits of your labor when you actually have a team to support you? So for this, under this part, under the leadership part, we will train you the know-how, the step-by-step, okay, of actually how to do recruitment, and more importantly, retention, okay, and how to motivate your team. And last but not least, okay, as always, we will always encourage you, don't be specialized in everything, okay, because jack of all trades is actually master of none. Pick one and be damn good at it, because that's how you brand yourself. And last but not least, the next stage is called the continuous booster. So the continuous booster, we have things, I'm sure some of you already attended some of these already. They are called the NAVIS Achiever Sharing. We get all the top achievers to share how they actually go about doing their business, so that we actually can so-called model ourselves after them, because we want to learn from the very best. Then, of course, today's session is Stuart's one. It's called the NBTO, Market Directions. And then, okay, then the last couple of weeks, we also seen the examples of NAVIS Clinic. For example, we attended Velda's clinic on rental. So this is where you bring all your so-called issues, and then we will have a chit-chat session, and it's a lot of learning from everybody, the best knowledge and the best practices from everyone. And last but not least, we have a new segment called this the RES. This one is actually helmed by Justin Kong and Darren Ong. They actually volunteered to become trainers for paper one and paper two revision for all the new RES they are taking exams. So if you got people that you are interested to recruit as brand new RES, they go and stick all they enroll in their schools, fine. But you do welcome them into our midst, so that they get the necessary support. There's a chat group inside here as well, that all the senior leaders are supporting them. So that is a big so-called way of bringing in new people into our NAVIS family. Now, the frequency, how often do we conduct all of this? All right. So there may be some of them are quite similar. Some of the changes will also be necessary. For example, some of the courses will be once a month. For example, the ignition mastery will be in once a month, because every month we will get new people coming in, new as in new RES as well as experienced agents. So they are supposed to attend this, and part of this training, Gary will actually be inside to do the opening and welcome, as well as giving them the overview. And part of this NIM also incorporates link up. So link up from now on will be combined together under Ignition Mastery. So the other courses are like along the way, it can be specialization, or it can be even in the main roadmap. It will depend on the frequency of the so-called the demand. So sometimes it can be conducted once every month. Sometimes it can be conducted once every 3 months, and then the other ones will be conducted every half a year. Okay. And the format, how do we actually go about carrying out all this so-called training format? The formats comes in two ways. It can either be a talk or it can be a course. Now, as in all talks, we call them sharing sessions. They are free, they are recorded, and they're going to be uploaded into our NAVIS learning group, the Facebook. Now,
Sorry, Anthony, can you unmute yourself first?
okay,
Accident. Yeah.
okay, that's all right. Okay, let me just recap again. So the talks, they'll be free and they'll be recorded. and as well as after being recorded, they will be uploaded into our NAVIS Learning Group Facebook. So just like today it is actually a talk. So if for those who missed it, you can actually get a copy. You can always review this. Now, if there are slides like today, this case, they'll be uploaded in link up as well. So you can refer to the decks simultaneously as you are listening to the talk as well. Now, the other one that is different is other courses. Now, the courses will be very, very different. First of all, they will be paid. Why? Because they have to be. We want to make sure that everybody is serious about learning. And from what we have learned from all the different trainers ourselves, we find that when you pay something, you become very, very serious. And in fact, your level of demand on the trainers, on the course material, on the venue, on everything, you will really up your standard. You say, how come don't have this? How come don't have that? Nah? So, and then you'll be also very, very punctual also, because you said, I'm paying for it. Now, how much are these courses? Okay, at the very least, you pay the minimum for the training materials. Okay, at the very least. And training materials is just basically the photocopy binded, and everybody gets a copy of it. All right. Now, there will be no recording for all purposes intended. If there's any recording, it will be the own trainer's personal choice. They can put an iPhone there or Android phone there to record themselves, so they actually can find out whether how they can improve for their own delivery. But there's no recording for the participants. So you have to stay alert, no after lunch syndrome, falling asleep. Okay, but nonetheless, you'll be guaranteed that you have a training manual provided, and you will actually follow it like a course note. Okay. Now the trainers, who are the trainers? Okay, we actually have got quite a good set of trainers, the existing trainers, as well as there are new volunteers, new trainers coming on board. So basically, we want to actually reassure everybody is that the trainers, they will be rotational. It means that, for example, if they're teaching one particular course, say, for example, the PWP, okay, you won't, if the person is teaching you about this topic called prospecting, you will not get this same person every time. So you will actually, you have other trainers coming on board also. The whole reason for this is that by rotational basis, it gives you, everybody, the participant, a wider range, a more colorful scope of experience when each trainer share with you their so-called colors of their experience. Okay, and of course we welcome you to give us your feedbacks, so that everybody can only make this so-called NAVIS training mastery get better and better. So last but not least, if you have any questions, can you you can unmute your mic right now, or you can type it into the chat group. Okay, so that's a very good sign. Either very silent or everybody has dropped off.
Still around, bro.
Still around. Okay. And because I can still see the chat room, okay, it's still 160 over. So I guess everybody can't wait to hear the next segment. Okay, very exciting. So nonetheless, if you have any questions, you can drop me your message directly, or you can put it in the chat group. Okay, then without I keep to my time limit, 15 minutes, really 15 minutes after the intro, I will hand this floor to Stuart, and take it away. I will unshare this right now.
Okay, thank you so much, Anthony. Guys, if you haven't done this job before that Anthony is doing, I can assure you it's not easy. I was doing it for quite a while early on in NAVIS formation. It's a lot of work. I think the most amount of work is in coordinating everyone's time, encouraging the trainers to come in and share also. So please, if you see Anthony around, please give him a pat on the back. He's really taking on a lot to help us as the deputy head of training, and he has changed so many things within our structure, and I'm really very grateful for that. Thank you so much, bro. Yeah, so yeah, please, see him, give him a Type slap, no, type slap on the back. Type pat on the back. Okay, so good, very good to see all of you, and thank you, Anthony, for sharing your plan. Right now, I'm going to share my screen. I have so much to share with you, so make sure. Okay, make sure. I'm going to give you a minute. Go and grab a drink. Okay, I got a drink here with me. I need some sugar so that I can have as much energy as possible to share with you my excitement, my discoveries, and everything. So please go and get yourself a drink. It's going to be long. I hate to be long-winded. You know, I'm not a long-winded person, but I have 90 over slides. Yeah, 90 over slides. I really took about 13, 14 hours to prepare the whole thing. I'm very tired now, but I'm still very excited to share with you. So please get a drink, okay? Your drink is finishing, Gerald, by the way. It's not going to last you throughout the session. Okay, let me just share my screen now. I understand that the Orange Tea's town hall has overshot a little bit, so I hope those guys they are already back here, because they were asking me to just hold on a little bit. Okay, so here we are. Market direction 2021. So first off, I hope everybody is good. Well, we are in the last month of the year, second last month of the year, and I'm sure this year has been very eventful or uneventful, depends on what you have been doing with your time in the past few months. Probably once in a lifetime, hopefully. But one thing for sure, we are getting out of the woods. Okay, signs are pointing better in most directions. There are a lot of cures coming to the picture. While there are also uncertainties, but we are out of the eye of the storm. Okay, so today what I want to share with you is very simple. In 2021, what is business going to be like? Are we going to be back to normal again? What are the signs in the marketplace that I covered in August with you that are taking shape right now in these past 3 months that has passed? So have you been taking action on the signals I shared with you? Have you been relaying them to your customers, engaging your friends? Because whatever knowledge that's unused will end up forgotten. So it becomes useless. Okay. So today I'm going to do the same thing again. I'm going to cover more ground. Okay, I'm going to cover some things I've updated since August, and then also to guide you on 2021 where to focus on. Okay, so there's some very interesting insights when I do research. Sometimes it takes so long. It's not because it's difficult to to picture to draw the data. That's just tedious, but it doesn't take a lot of time. The most difficult part is to identify trends in the market and backtest concepts, backtest my own thesis. All right, and then to find data that corresponds or disprove what my thesis is. So that's what takes the most time. And I think there's a few major areas that it will be very exciting to you all, okay, to prospect and to engage your friends and clients in the next year. Now, this was what happened in August. If you haven't joined us then, please go into Facebook group, NAVIS Learning Group. There are a lot of videos there, awesome training videos from the rest of our trainers, from Anthony, from Justin Kong, from a lot of our trainers that are there, and go through them, okay? So you have to listen and re-listen and re-listen so that you internalize what's happening. Sometimes we listen, but we are not convicted. When we're not convicted, we will not be able to convince ourselves and convince others of our point of view. So you have to listen and re-listen, all right? So 26th of August, please go back there and just listen to that again if you have missed that, okay? Because some parts I will not run through so in-depth because the last round I did it in August. Now, what is happening in the market? Yes, COVID has struck, let's do a macro view first. COVID has struck us, the market badly. Some people have lost their jobs. Some people have been furloughed. They lost, they are no longer earning as much as before. But people have been talking about a U-shaped recovery, a V-shaped recovery, and so forth. But so far, what we are seeing in the market is more like a K-shaped recovery. All right. So this is taken from the US Chamber of Commerce. It's happening around the world. This K-shaped recovery where the wealthy people are getting wealthier. Okay, those that are gainfully employed or in certain industries, especially, they are doing especially well. They are less affected by furlough because they can work from home and work anywhere there's an internet. Whereas some areas in the economy, such as the lower wages segment or travel, entertainment, hospitality, some food businesses are also suffering very badly. So this is turning out to be a two-pronged kind of recovery. Some people are doing especially well, some people are not doing well. Yeah, so it's important to know, because although we are not, it will still take a while to get out of the woods, there are still a lot of money to be made in certain areas of the market. So hopefully you are there, hopefully you are able to guide people there as well. So if you remember in August, I shared with you this, okay, Federal Reserve printing from the left. Okay, we saw money being printed in Q4 2019. Okay, just hang on, let me just get my marker, okay, over here. And then we had a US stock rally in March when the market dropped very badly and rallied back. Singapore rallied thereafter. Okay, and then more recently in these past 2 weeks, if you notice the stock market in Singapore, we had a very strong rally the past 2 weeks, about 15% easily. All your bank stocks, UOB stocks, DBS stocks, all went up a lot. Okay, and we are somewhere around this mark already. And what we are looking at is actually a rebound in the real estate market next. Okay, real estate is a less volatile market and also a slower market, a lagging indicator. Stock markets are usually the leading indicator in the world. I'll explain to you why. All right. And recently, if you have been out there selling resale homes or serving buyers, you realize things have changed so rapidly. What has changed? You will know that resale owners, HDB owners, are getting COV everywhere from Woodlands COV 30K to, of course, Punggol to Tampines to even very old flat COV. Okay, and this is the HDB market. And then the resale market, a lot of owners have sold their units fast, and then there's a lack of supply in many launches, in many resale condos. In one weekend, Danny Han, one of our teammates, sold Maplewoods at a very, very good price in just one weekend. I think there was 12 or 20, 12 or so viewings. So there's a lot of clear signs of rebound. In this COVID situation, one thing has occurred, which is very evident now. People are staying at home so much that they are willing to invest in better homes. Right? They are staying at home so much, they need bigger homes, better homes, and they feel the need to upgrade. Okay, and my friends are like that too. They are finding that their homes are too small. They are all like, I need a 3-room, a bigger 3-room, not a 990 square feet room. I need a larger one, and so on. Okay, so this is real, this on the ground. If you have not been active in these past few months, this is actually really what's happening, and you got to get your momentum back soon. Okay, and why is this happening? I want to explain to you this stock market versus economy time lag theory, all right? So usually what happens is the stock market will react first because a lot of analysts, banks and everything will be analyzing the market. Okay, so stock market is the orange line, economy is the blue line. Of course, the economy moves, right, on news, and also similarly, real estate markets usually move on news. The average layman home buyer is someone who doesn't actively monitor the other markets or economic signals. They just look at the Straits Times, Channel News Asia, Today Online, and so on. And by then the news comes out, they are late to the game. So what we are seeing here is actually a time delay, all right? Okay, so we have to know stock market. Why? Because stock market in the past few months have been appreciating, going up, right? Okay, and then what is happening in the economy? The economy is likely put in a very near, okay, now we are probably near the bottom or somewhere here. Okay, why? Because the stock market has been recovering for a while. Now, I want to ask you, when you buy into real estate, right? You want to buy in when? Okay, you want to buy in before you hit the top here, right? Because once you hit the top here, what happens is that's the market top. Once you hit the market top, the market starts to go down. But for a lot of people in these early stages of growth, right, they are cynical. They have skepticism. They say that it's not over yet. The worst is yet to come. Some people have a negativity bias. Worse, forever the sky is falling. One day they'll be right. Okay, one day they'll be right. But where are we now? The economy, if I ask you, where are we presently? This part, where do you think we are? Okay, where do you think we are? Make a guess. Okay, very likely we are somewhere just here. Meaning, before you know it, okay, this turnaround will come in. In fact, in the real estate market, if you look at the HDB market, it has already went up Okay, quite a fair bit over 4 months. The private market, what has happened, the flash estimates for October is the same, flattish over September, meaning we are probably bottom already. There's no bottom anymore. Why? Because the whole economy is coming back. Look at the news. Most reports are very bullish. Okay, so what you want to do is to get it early here. Okay, and early meaning within this phase, within this area. Hopefully, you want to get in now. Okay, or those who are still not convicted within a short time space here. And this, I would say, likely will be before Q2 2021. Why? The moment it starts to go up, meaning the news, the economy really starts to bounce back. You see GDP growth up, MTI, Ministry of Trade and Industry, start to report all the good news and opening up the market and everything. This is lagging news. If you only come in here, if you only come in here when the news, majority of the news is out, you'll be buying near the top of the market again, or near to the top, which means that you are likely to see this right down. Okay, a lot of people lose money because they don't understand this. They look at the news and they make the decisions too late. Okay, a lot of financially savvy people are making decisions way ahead of time. Okay, so this is one important thing I want to share with you, this graph. Understand there's always a lag time between economies and stock market, and stock markets help us to know where the economy is headed in the next 6 months, 9 months. You want to enter early, not enter when news is out. Okay, next. What has happened since August when we talked? Okay, this is the Singapore stock market. Okay, this is the low. The low was here, as you can see here. And then there was a rally. And then it came down again. And then there was another rally in the past 2 weeks, a very strong rally, 15% or so. Okay, right now we are almost 89% of pre-COVID times. And this is very interesting because people, banks, analysts, a lot of investors who are actively investing, they are already bullish on the market next year. Okay, next. We take a look at the US market, okay, because as I told you in August, right, when US market becomes overvalued, what happens? A lot of investors will take money off the table and they move their funds back to Singapore, which was exactly in the past 2 weeks what happened. Okay, why was the US market overvalued? Now let's take a look here. Okay, this was the peak of the US market before it went down due to COVID. Okay, and then it recovered all the way back to here. And if you look at it this way, it's even past the last highs. Okay, past the last highs and still climbing. So when this happens, and because I trade both markets also, when this happens, a lot of people, investors, are getting money out of overvalued stocks in the US. When they get money out of overvalued stocks, right, where will they put it? Okay, they'll put it into areas like Hong Kong, China stocks, Singapore stocks. And some of them, of course, they want to be all in on stocks because all in on stocks is equally risky, right? So they will look for properties, or they will look to increase their property quantum from maybe from a small landed to a bigger landed, from a small condo to a bigger condo, or to a penthouse. Okay, so the US market has gone past the past high in pre-COVID stage, and this is why fund flow is coming in. So that's why I told you earlier, you have to study the fund flow and you have to know that stock market leads many markets. Okay, now this chart is something that compares the PPI, the property price index of non-landed, because that's the majority of the private market, and the STI. Okay, and I want to show you here that usually the PPI will see gains averagely 2 to 3 quarters after STI recovers. Okay, so what you can see here, I have highlighted in this, okay, in this shaded area. You can see here the red color one is the STI, right? It recovered somewhere in the second quarter of 1998. In this case, the recovery back in 98. And then subsequently over here in quarter 4, 2 quarters later, the PPI recovered. Okay, the next one you'll see is here, this area. Okay, what happened here? You can see that the recovery in the stock market happened in 2003 Q2. Okay, and a strong recovery, it took a while, but a strong recovery in the in the private property market only came about somewhere here in 2006. That was quite long, that was almost 3 years later. Okay, but similarly, when the STI drops, right, over here, when it drops, you can see that a few quarters later, the property price index drops. Okay, they are very, very closely correlated. Next one, was 2009, 2009 when the recovery came about in the stock market. That was somewhere in Q4 to Q1 of 2009. The next thing you know, about 2 quarters later, here, this area. Okay, from here to here, the property price index went up. Okay, then subsequently, there was a lot of strong growth here in this area. And what we're going to see here again is once again the red color line. When it went up, 3 quarters later, the PPI went up. Okay, so where are we now on the Straits Times Index? Okay, although this is because this is a blown out chart, it's from very far away, so you can't really see here that there's a recovery in this part, but the recovery has already surfaced. Okay, because it's quarter data. The previous slide, if you remember, I showed you the monthly data. From the monthly data, you can see what's happening. The uptick in the STI already is more than 15%. So this is actually an uptick. When this uptick comes about, you can be very sure that this area is going to see another upside trend. Okay, so I want you to share these things with your clients. Some of them are very savvy, some of them are not savvy. But either way, both will benefit by you sharing, understanding, and sharing with them, right? They will know that you know your stuff. Okay, because you just don't want to be a buy, sell, rent broker without any value add or any value added insights. Okay, so where do I estimate the market to start to be a lot more bearish, and the news to be, very strong data and property recovery data to start coming about? This is when I expect it to come in. December 2020 all the way to March 2021. So in the next 1 quarter, okay, the next quarter is very important for you to reach out. Okay, this is the best chance to grab clients, to work with them. Okay, be the one who gives them the heads up, because then they will stick with you and work with you. They're more likely to do so. Okay, now I want to look at this investor psychology, because apart from data, emotions also play a part. Confidence also play a part. Sentiments in investing. So I want you to look at this chart and tell me, where do you think the market is? Okay, where are investors at? At which point are they at? Or at which point, if you cannot tell where the investors are at, tell me, where are you at? And then put inside the chat group. I just want to see your answers. Where do you think the market is at this moment? Are we at the euphoria stage, the anxiety stage, denial stage? Are we in a desperation stage? Are we in a depression state? Are we in hope, relief, or optimism state? What state is the market in? I want to ask you. Okay, some of you say relief, some say optimism. Okay, getting ready to buy. Sorry, there's no such stage. Which one is it? Fear. Where is fear? Fear. Okay, some of you are saying fear is still coming down. Okay, optimism, hope. Some more. I want you to take a look at each other's answers. Okay, because your bias, that means your belief of how the world is, may not be representative of how most people are thinking. You have to know what the majority are thinking. Why? Because some of you are always staying at home, isolated, keeping to yourself. Then you will never know what the market is really thinking. Okay. Now, so if you look at the answers so far, carry on, keep it coming. Which stage do you think the market is at? Okay, you can see a lot of answers, probably about 60 to 70% of the answers are relief. Okay, relief. So a lot of people are saying we are somewhere here, relief. Some of them are saying we are in the optimism stage. Okay, probably about 10% or so. Some are saying we are in the hope stage. Okay, and then a few are saying depression stage. This depression, despondency. Okay, depression is here, despondency stage. Okay. Then are there anybody who says is capitulation? Capitulation means give up hope. Really, everybody just give up hope. Just want to dump everything we have. No, right? We are past that, right? So tell me now, is it a good time to enter the market at this stage, or is it better when the news comes out and everybody's excited, or trade and then you come in here? Is it better to go in there? Yeah, we're definitely out of the worst stage. Yeah, that's right. So help your clients also understand where they should be taking action. A lot of people take action at the wrong place. They take action when they're excited and feel, wow, the news keep coming out, all the good news. Every bank is saying good news. DBS, UOB, OCBC, all saying good news, and then they buy. Or worse, they take action, wow, euphoria, wow, 包赚钱, buy anything also will make money one. At the stage where the stock market is doing very healthily, the news is all good, the ministers are coming out and shaking all your hands, not wearing masks, okay? Then those stages are when you have to be careful. You probably want to be selling because then the risk is higher. It's very low opportunity for upside, okay? Now is the best time. Now is the best time, and you have to be convinced of it. You have to let your clients know to enter now before everything becomes too overly bullish and fair values are no longer fair value. Today you go and buy, you may still have to, you may be able to get fair valuation for private market. Some of them already asking above valuation, 30 to 40, 50K above valuation, or 3 to 5% above valuation. And sometimes people are saying, no, I'm not willing to pay that because, why should I be paying 3 to 5% more? The fact is, if you don't pay 3 to 5% more now, in 2 or 3 quarters later, you might see you have to pay 10% more. Okay, because why? The market stage. We are in the hope, relief, optimism for most of us. Okay, if we think we are over bullish, sometimes we are in the depression stage. Then still, it's still the part of market that is starting to climb up, and this is where greatest opportunity is, and the risk is the lowest. Okay, of course, it's not just about emotions and sentiments. I will explain to you fundamentals later. What is driving the market supply and demand? So you understand that as well. Okay, all these things I'm showing you are in a slide deck that you can refer to and you can present to your clients. Ask them questions as well. A good presentation is not one where you just talk. You ask them where are they at, where do you think people are at, and then let them think for themselves whether they want to take the risk to go in now. Because low risk, all investment carry risk, but low risk is better than high risk. Okay, now next. Characteristics of a recovery phase. Now, look at this chart about economic cycles, okay, and the checklist of things that usually happen at each stage of the cycle, and then tell me in the chat group, where do you think we are now? Okay, are we in the recovery phase? Are we in this phase? Okay, is this what you see in the market? Or are we in the early upswing phase? Or are we in the late upswing phase? Or are we still in a recessionary phase? Where are we? Okay, so where are we? Cheryl says recovery, very good. Cheryl says early upswing, okay, very good. What else? Early recovery, early upswing, okay. Okay, some of you may be still reading. Good. Okay, so let's take a look at the recovery and early upswing phase since most of you have this. Okay, Roy says you're still in recession. Lynn says recession. Okay, no problem. Okay, let's take a look. Let's take a look at recession first. Okay, on this side. Okay, recession. Confidence. Is confidence weak right now? Nah, it's not really weak, right? It's not the worst. It's probably not very high yet, but it's not really that weak. So relatively maybe in the middle, let's say a 5 out of 10. Okay. Inflation peaks. Is inflation peaking? Not really. Production falling? Yeah, probably yes. Okay, production is probably won't say falling, it's fell already. It's more like it's at the bottom and is it going to recover next year? Okay. Short rates are what? Interest rates. Okay, drops already dropped. Okay, bond yields drop already dropped. Stock market bottoming already recovered, right? Commodities weak, yes. Oil price is still very weak. Okay, gold price is not, but oil price is very weak. Property prices weak, no. So it's not entirely recession, but yes, there are some little bit of signs of recession, but it's close. It's like just out of recession mode. Okay, how about the recovery mode? Are we seeing stimulatory economic policies? Yes, right? Okay, we are giving, the government is giving so much in the market, right? Confidence picked up? Yes, a little bit. Okay, inflation falling. Inflation is still low as of now. Okay, interest rates low. Yes. Bond yields bottom already. Stock market rising. Yes. Commodities rising. No, not yet. So yes. Property prices bottoming. In fact, recovering already. Right. So where are we exactly? We could be somewhere. Okay, there's no right or wrong answer. Let's just compare notes. Okay. Then there's also this early upswing phase where healthy economic growth, no, not yet there. Increasing confidence, yeah, somewhat slowly but surely. Okay, inflation remains low, yeah, okay. Stock market strong, not yet. Already strong? Not yet. Property prices picking up? Yes. Okay. Short rates neutral. No, this one is okay. Nothing neutral. On neutral. Okay. So where are we? We could be somewhere between. Okay. We could be somewhere. Okay. This chart is supposed to loop around. Of course, recession goes into recovery. Recovery goes to upswing and so on. We could be somewhere around. Okay. This level, all the way to this level. It could be around here. But does it really matter? Where within here it doesn't really matter. What really matters is we are now going to here. And in property, you would be buying and holding for at least what? Okay, 3 years a bit short to be very frank. For real estate, nobody invests 3 years and let go. Usually at least 5 years to 8 years at least, or I would say personally 10 years. Okay, so as long as you are in this phase, right, shouldn't you be actively searching for something to put your money in already, so you can ride this wave as much as possible? Okay, so understand certain characteristics are there already, and we have to take action, and we have to be convicted and share with our clients all this. Next, take a look at HDB flats. HDB flats, there's rising support in HDB prices. Okay, where does all this come from? It actually comes from the stimulus in the housing market, in the CPF and enhanced housing grants coming into the picture in September 2019. Okay, so this is once again from 1990, but if you go up close, right, this is the area that we are seeing an uptick. Okay, so even mass market homes are going up across the board. Is it going to buoy up the whole market? Answer is usually yes. When you see HDB market going up, HDB sellers sell, have more cash on hand, what will they buy? Okay, some of them will buy HDB, but a lot of them will buy private. Okay, and then this money goes on, flows. Okay, next, high net worth markets are poised to switch asset classes. Why do I say that? If those of you who invest in gold, you know that gold doesn't pay you anything. There's no dividend from gold unless you buy a gold mining company like Warren Buffett. Okay. Otherwise, gold is non-yielding. And if you look at the trend of gold, what I like to look at is the gap between the two. Okay, the gap between the two. So what you see here is this gap. Usually, there's a gap between gold prices and property prices. And this is landed property index, by the way. Okay, so at this point, you can see gold prices have soared so much that a lot of people are getting out. Because why? You want to take profits. You don't want to be just cashing all the way, wait until markets turn and you cash out. People are taking profits. All right. And at this point, property markets are just going up only. Once again, uptick is evident there in Q3. Okay. And many times in the past also, gold markets rises and then property markets start rising a little bit later. Okay. Gold prices rise over here before property prices rise also. Okay, and then in this stage, okay, over here there's a gold market rise, and then property markets finally pick up somewhere here. Okay, and this time round is a very steep climb in gold prices. What about property prices? Okay, what about property prices? There are a lot of signs in the market that we need to pick up on fast, not only when the news covers it. Okay, those of you who are afraid that COVID has resulted in a lot of people losing jobs, not having income to pay their loans and so on. Well, obviously, what we have seen is the government doesn't want the housing market to collapse because of mortgage loans, defaulting, right? So they have extended the repayment of loans. And not only that, what we can see here, and this is up to Q3 data, Q3 means end of September. We can see here that over here, the liabilities column, okay, liabilities column here has dropped. Okay, what we want to see is liabilities going up. Because when liabilities go up, then there's a higher risk of a default coming in. Okay, so next, we want to see the household net worth. Okay, household net worth at Q3. And these are all from government data, data.gov.sg. Q3, you can see over here, the gap between prices, high net worth, and PPI, property price index, is very small. If you look further in, okay, and look at their financial assets, Singapore citizens, residents here, okay, have the highest amount of financial assets ever in the history of Singapore, and it's growing. Okay, so while there are people who are losing their jobs, there are a lot of people who are sitting on a lot of assets and still doing better. And we have to know that whether or not we are doing well, we have to know what really is happening in the market, okay, and not be blinded by biases of our own. Okay, money supply and PPI, we can see an uptick very clearly here in money supply. Okay, and when money supply increases, while more money chases after the same amount of assets, what happens? You know the answer. Supply and demand will cause inflation to happen. The thing that is holding back all these inflationary pressures on property is what? It's really the cooling measures, without which our property prices would have been probably double of what it is right now already. Okay, so does that mean that if the property market becomes too strong next year, there'll be more cooling measures? Yeah, definitely. Definitely. We have seen time and again, if things, or rather the property market goes up too much, too soon, government won't hesitate to do something, right? So now it's 75% loan. For all we know, if the market really is so bullish, they may even reduce 70% loan. By then, it's going to be harder to buy. Or maybe then your first property stamp duty is going to be 4% across, whether it's $1 million, more than $1 million or less than $1 million, 4% stamp duty, 5% stamp duty. Okay, it's just going to get more stringent because Singapore's property has been very strong and attractive to not only a local audience, but to the global audience. And because of that, right, even with so much cooling measures, it still attracts a lot of funds in. So it may get harder to buy for a lot of us next time. So if you can buy, you want to buy earlier. Don't wait until the rules come out and regret. Okay, market segments. Now I want to update you all from the macro side. I want to update you on market segment price trends. I understand some of you do commercial, industrial, and I have included this as well. But I will go through this broadly, okay, because I don't have the ability to go in depth into each area of like commercial or each area of industrial. So business time, 6th of November, okay, just a few weeks back, HDB resale prices rise for 4th straight month in October. Okay, in the 4 months that passed, HDB prices keep going up higher and higher. Okay, we have to know this, and the funds are going to pour back into some markets. HDB sellers may buy a private, HDB sellers may also pour some money into the stock market. Okay, because money doesn't sit in the bank right now. It's going to cost you money instead when you put it in the bank. Okay, overall, HDB price trends, we can see that the past 1 year, November 2019 to October 2020, what you see here is a yearly increase of about, so far, 7.88%. But if this sustains, it will be probably about 8% growth for the whole year. From about 419 per square foot to 452 per square foot, averagely, yeah. Okay, of course, there are highs and lows of different districts. Now, this is maybe a bit difficult to see on your phone. Okay, but if you're on a computer, you should be able to see it. We have the different price trends. You can see generally the trend from a year ago is going up. Okay, except for probably for this, let's see, for Central. Okay, Central, there's one drop, right? A very steep drop in April. Why? Because there were no transactions then. Okay, that's why, because there are very few HDBs in Central area. Colorblind cannot see. Oh, I'm very sorry. I can only do so much here. Okay, so just listen now. Right, for most of the other districts, what we see here is Ang Mo Kio, Bedok, Bishan, Bukit Batok, Bukit Merah, Bukit Panjang, Bukit Timah, Central is ABC from alphabetical order. Choa Chu Kang, Clementi, and so on until Jurong West is an uptrend. Okay, so that's why HDB market, you're seeing people chase after prices. Sellers may change price. Seller may want higher than valuation. It's a norm nowadays. Okay, the next one, town level, is from Kallang all the way to Yishun. Okay, we can see the top line, the orange line, that one is the steepest climb so far, is Queenstown. Queenstown HDB from 590 PSF now is about 690 PSF. So your average 1,000 square feet unit there, HDB will be about probably 700,000. Okay, from 600,000 a year ago. Good increase? Yes, no doubt, good increase. And all these are largely due to the enhanced housing grant. That's basically cash payouts to resale owners. I think the effect should have come in earlier in March, April, May. However, because of COVID, right, so there's a pause in price growth. Okay, so overall, you'll see the rest of the districts all going up in price, from Punggol, Sengkang, even Sembawang, across the board. Okay, so this time round, the appreciation is not constrained to the private market, but the HDB market owners are also getting a good windfall from this. So I think the next time round, they will do this type of stimulus earlier than September, because when elections came around, the effect wasn't there yet. Okay, so on 16 November, what happened in the private in the private resale market? Condos volume went up 21%. Okay, as buyers sense the worst is over. Okay, whenever I read the news, especially Straits Times and Business Times, I note the title. Okay, the title, usually all these things are very censored one. Whatever we read are very censored by the government. Okay, the government wants us to think a certain way, they will show a certain headline. Okay, of course, they won't be all good and no bad. There's always a balance between, there's a lot of good news, then we better have some bad news so that people are also wiser. They don't just turn euphoric overnight and then just go and buy up the whole market. Okay, so buyer sense worst is over. This appears to me something like the government wants us to know, hey, you know what, the worst is over. You all can go ahead and do what you want to do. Go and spend, basically, because the economy needs us to spend to recover. Okay, condo prices hit a 2-year high, while prices rise 0.8%. Okay, we can see once again, this from SRX. Okay, so the same news but in different media, okay, ST and BT. Okay, so across the board, this is happening. So let's take a look at private non-landed prices in the outside core region. Was there a dip? Not much of a dip. If you look at March, April, May, you will realize that, hey, it didn't really dip. It's like almost like flattish, like up and down. There's no straight line, perfect straight line one, but it's always a little up and down. But more or less, you can see volumes creep back a lot from July all the way till October. Okay, even in November, we have seen a lot of volume so far. So what is likely to happen next is you will see September and October is a slight climb in prices. October to November, I expect to see another climb in prices. Okay. RCR, similarly, RCR is almost no correction, okay, except for April, where probably the gloomiest period of our life at that point. We were all very worried. We were all afraid, not too sure what's going to happen, whether this is going to be worse than whatever is reported in the media. So April was a very bad stage for sentiment. So people were trying to cut their losses or trying to just sell and just take a lower price. By now, they will have regretted because prices are largely coming back up. Okay, that's the RCR region. Let's take a look at the core central region. Okay, core central region, people are a lot more affected. As you can see in March, what happened was people from 2,100, about 2,100 PSF, prices came down averagely to 2,009. Very likely also because in this the higher quantum segment, right, there's some more space for negotiation. At the same time, some people exited then, like my clients, they exited them then was not because they really were urgent to sell, but because they saw a lot of discounts in the stock market. So they were taking money out of property, sell faster, discount a little bit, never mind, by going and grab all the, your Google stock, Facebook stock, Amazon, Alibaba at a cheap price. All right. So that was what happened. And then subsequently it recovered back. And we can see in August, it was the lowest point. And then September, October recovery came back again. Okay, so strong volume coming back. Overall, what we can tell from here is basically the property market is very, is it involatile or unvolatile? I think it's unvolatile, right? Unvolatile. Okay, so compared to a lot of more liquid markets, we are a lot safer holding on properties because we don't do emotional things and suddenly want to sell off the property just to get out of the fear. Okay, in the landed segment, outside core region, prices went up the most, in fact, in April, and then it went back down a little bit. July was probably the bottom of it when it corrected in July. Okay, and then subsequently almost sideways. Okay, in the coming months, I will expect to see prices climb up also. Why? Because you can see very strong volume rebound in the past 4 months. And strong volume means that sellers also know, because agents will be knocking on their doors and they have a house on the market. A lot of people knocking on their doors means that more people will be willing to pay a price sooner or later. Okay, in the rest of central region, okay, the trough, the lowest point was in June. Okay, following that, we had a recovery, and then in the past 3 months, it's almost sideways, but likely also to bounce back in the landed market because of reasons I mentioned earlier about other markets being overvalued. Then take a look at the core central region. Core central region landed suffered the biggest discounts in April and May. While there are discounts, some who couldn't hold on sold, right? Some of them totally withdrew from market also. Okay, so those who couldn't hold on, didn't want to hold on, sold there and then. After which now we see October, there was a dip. But is this area likely to bounce back up? Yes, very likely to bounce back up as well. Okay. So in the new home segment, let's take a look. I'll have put in 3 graphs at once. Here there's a RCR, CCR, and OCR. We can see that they are also very sideways trending, even in such a huge crisis. Okay, so chances of it going up once again is high. You can see in the RCR segment for new homes, prices have inched up already from about 1,008 all the way up to 2,000 per square foot. Okay, so your RCR segment is averagely 2,000 PSF. Your OCR segment is averagely about 1,005 right now, and your core central region is about 2,006 per square foot right now. Okay. ECs, okay, ECs climb a lot over the year. You can see it went up quite a bit. The low point was probably April or so, January of course, then followed by April. And then moving forward, right, we're going to see ECs cost upwards of 1,001 already, because price, once again, developers are very hungry for land, bidding for higher price. Construction cost is going to increase, as the minister has already announced, and all these bode very well for EC buyers and owners also. So if you can focus on something, let's say if you're doing a lot of digital marketing and you want to focus on certain segments, right? EC is one segment I strongly encourage you to focus on. It's easier to convince people to buy. There's very high upside potential for it as well. And then of course, from a HD buyer to buy an EC, right? There's no ABSD, there's no LTV limits also. Right? You go straight for 75% loan still. So it's very affordable for a lot of HDB owners. Okay, so EC market, take note. Now, let's talk about some commercial. Offices sale trend. Okay, sales trend, the middle part of the year did drop. So we have March dropping, and then all the way till August dropping. But September, October, a lot of people are also moving up. Also, a lot of people are also taking up space again. Okay, so companies are also taking the chance to list some places at a discount now before everything clears up, and then there's no discount. Everybody's busy fighting for space again. Okay, so we are seeing an uptick there in offices. We see retail sales in the past 3 months. Retail sales also uptick in sales prices. It really didn't drop much, right? Averagely 4,000 PSF. Now it's about 3,000 PSF. Okay lah, yeah, it did. For retail, it did lah. 4,000, 3,000 is quite a bit, okay, but a lot of them are coming in now to grab space. Okay, private shop houses. Wow, private shop houses very interestingly went up. It's like a monopoly game. I always say, once you finish buying landed properties, and then people who own GCBs and everything, then what do they buy? The next thing they can buy is shop houses. It's like monopoly. They don't make more shop houses anymore. They make more. Developers are still building more landed homes, but nobody's building new shop houses. So in the long run, it becomes like a Hong Kong or Penang issue where it becomes exchange. This very rare artwork, art piece. The shop house is like art piece. It's an exchange between high net worth and institutional funds. Okay, they start to collect something that is rare. Now we can see prices also climbing back up from May, the bottom of it, all the way up to currently it's about 4,500 per square foot. Okay, warehouses space. There were some asking me about warehouses. B1 warehouses, well, prices are almost sideways. I guess warehouses are still important, especially in today's market of delivery, online sales, and everything. Right? Warehousing is still doing very well. Okay, so it's sustainable. Okay, it's not dropping. It's not going up fast. Also, it's just sustaining. B2 factories also, just flattish. not much movement in prices. Okay, office rental trends. They are also recovering in the past 3 months, although flattish, but recovering a little bit. So they are almost the same price as pre-COVID times already. If you look back at January, December, and November. Then retail prices. Okay, retail prices did come down. So of course, there's a lot of rebates and everything, right? So apart from that, in August, there was a slip. From July to August, it went down a little bit, and then went down, it was flattish, and then went down a little bit more in October. Is it likely to still, correct or stay lowered for a while? I guess so for this part. Hey, retailers are still suffering. So private shop houses, rentals, they went up past the phase 2. And then after that, they slipped a little bit more also in October. Okay, and then B1 warehouse rentals, we see an uptick in May, but following that, it went down, back down to about $1, and it's probably, sorry, not $1, $1 and $1.90 to $2 per square foot rental, still about there. Okay, flattish. B2 factories rent also around 170 to 180 per square foot, in case you're covering that segment. Yes, correct. So good news. Okay, so yes, there's no community cases for the past 15 days. So that's great news for the economy. Okay, so now we talk about focus areas. With all this data and everything, I know that's necessary. It's boring, but it's necessary. Okay, so 221 focus areas. Where can you focus on and find opportunities? Okay, we always need an angle. Without an angle to pitch, right? It's very hard to get any sales or anybody to take action. And through door knocking of our HDB, some of our people doing HDB, right? They door knock, they share a couple of slides, and then they got a sale and a purchase done, upgrading done, and so on. So what do you need to approach people? Okay, some slides coming up. First, we want to talk about owners of HDB flats with declining growth. Okay, it's a bigger market now. Okay, and I have done some studies I will share with you. I'm sure with this you can make some money from it. Okay, owners of HDB flats with declining growth. We will first study the capital appreciation rate for HDB flats of different age groups. Okay, people are always saying, hey, sell at MOP or sell on the 10-year or sell at the 20-year. Which year should we sell that will make us the most money? Now, this is where we will talk about this. Okay, so I have dissected the early years into 5 years, 5-year, 5 to 10 year, because 0 to 5 year, obviously you can't sell for most people. Okay, so 5 to 10 year, 10 to 15 year, 15 to 20 year, and then after that we go by batches of 10 to 30 year, 30 to 40 year, because there's no need to micro cut it anymore. Okay, so in the first 5 years from MOP, right, prices of flats generally grows about 2.65% in the past 10 years. Okay, I didn't use anything beyond that because rules long ago were a lot different, no MSR and so on. So now we just talk about what is more current in the market. Okay, 5 to 10 year average growth 2.65. Okay, 11 to 15 years, interestingly, grew quite a bit. So flats that were sold in their 11 to 15 year, owners actually made more money. They made 5.15% per annum than those who sold during MOP. Of course, this is generalizing also. I know in certain neighborhoods, like Punggol, those that sold in the 5th and 6th year might have made more than those in the 10th year. Okay, but this is overall, broad market view. Okay, you can still do a micro study of each area if you really want. Okay, so 11 to 15 years flats right now should be getting a lot of returns. Beyond the 15 year, if they hold on some more, they will see their returns drop to 1.97% per annum. Not so attractive anymore. You don't beat inflation. Inflation averagely about 2.56%. Okay, so you want to beat inflation at least. And your CPF pays you 2.5%. Obviously, there's a reason. Okay, because inflation averagely is 2.56%. So 1.97% is not really good. So any owner who is holding beyond a 15 year ought to sell their HDB. Okay, so this is a sales angle. Go and find people, go and look back in MOP clusters long ago. Everybody is targeting the new MOPs. And if everybody does that, right, you're going to find it very hard to stand out. But you could use this as an angle to target owners who have stayed in their HDBs or owners who have flats that are more than 15 years old. what's the reason you should really be looking to sell right now? Okay, because the growth is going down. Okay, how about the 20th to 30th year? Okay, flats in the 20 to 30 age category, right, grow by only 0.5%, 0.57% per annum. Very bad growth. Okay, and then flats that are 30 to 40% are starting to depreciate already. So unless all they want is a roof over their head, the cheapest possible roof over their head, then fair enough, hold on to your aged HDB flat. But if you want your funds to grow and you're still, especially in your peak earning years or probably less than 50 even, then you should really be looking at recycling capital from an older flat to a younger flat before it depreciates any further. Okay. So to summarize this part, between 2010 to 2020, the recent 10 years, the best returns across the island were found in flats sold between the 11 to 15 years, followed by 5th to 10 year, followed by 16 to 20th year. Okay, meaning if anyone is holding a flat that is 5-year-old, can they still hold on and expect some capital appreciation, decent capital appreciation? The answer is yes, they can. In fact, 11 to 15 year is the mark where they even grow exponentially. Okay, so they can hold a little bit more. Does that mean you have no business to do? No, doesn't mean that way. There are a lot of flats. If you backtrack to look for clusters that are in their 15 years of age right now, they should be getting out. Or 12 years, 13, 14 years, they also can think about getting out. Or some of them are already in the 16 to 20th year olds already, like Sengkang area, a lot in Tampines, a lot in Yishun. You can also look for them and talk to them. Hey, you know what? If you carry on holding on, what's going to happen once you pass the 20-year mark? Is likelihood your returns are going to drop to average of only what 0.57%. It's not going to be very attractive, and you're going to see your money work less hard for you. So why not look at recycling capital to a young property, a newer property with a fresher lease? Okay, so then obviously flats between 30th to 40th year are depreciating. So if possible, give them a heads up whether they want to take action or not. Give them a heads up, so it's up to them to decide. Okay, so I'm sure you can do some wonders. Okay, this is across the board. Rare EMs or even rare HGV like Pinnacle and Duxton, all these they are a different breed. So you won't have to do a very localized study of that cluster in order to find out. Yeah, so what I'm giving you is across the board so that all of you in different areas from Jurong to Boon Lay to Pasir Ris, right, at least have a pitch to go on. And then from there, you might have to go in depth about, let's say you say about EM or certain areas, then you might, or like Holland, then you might want to do a study on that by drawing our analyzer from office, okay, or going to HPROP and getting some data from there. Okay, so yeah, so I hope I answered you, Eileen. Now, how about owners of leasehold private homes? Okay, leasehold, by this I don't mean 999, I mean the 9 years. Okay, with declining growth. Similarly, now as we approach the Singapore is like 50 something year old, right? I can't remember, 55. I can't remember. Okay, anyway, now as we're starting to age, right, we see a lot of leasehold homes with less growth potential than before. Thank you so much, 55. Okay, so how about the capital appreciation rate for 99 years leasehold? So I'm going to explain to you the same thing so that those of you working on private markets can also have an angle to pitch to condo owners who are in a certain category. Okay, so for the 0 to 5 year old condos, right, post TOP, these are all resale. So after TOP, 0 to 5 years old appreciates by 2% per annum. That's why property, I say you want to hold for 5 years, you make peanuts. You should optimally be holding at least 8 to 10 years. Yeah, so that you see more gains. Okay, what happens in the second half of the 5 years? 6 to 10 years. Now we're talking 4% per annum. Okay, 4% per annum growth in the 6 to 10 year of holding. How about the 11 to 15? 11 to 15 year. Okay, 11 to 15 year, it went up by even more, 4.51%. Okay, that's good, 4.51%. Then after that, 16 to 20th year, it started to drop already. Now it's closer to inflation rate. Okay, so 16 to 20 year capital growth is 2.85%. So same things. Remember, I always mention to you all that try not to buy something that is too old. And my own guideline, of course, you don't buy something. If you really want to buy a resale condo, don't buy something that is more than 15 years old. Yeah, although 15 years, you stay 10 years, 25-year-old, you sell it, you may not make a lot of money. At least you don't lose money. You likelihood you won't lose that much money. But if you buy something that's too old, you start to see depreciating returns, declining returns. And then when you sell it 10 years, 20 years later, you might incur a loss. Okay. And then finally, 20 to 30 year category, you make 1% per annum. Okay, which is stat. Okay, this group. So you might want to target owners who are holding past the 15 year. Sorry, just a minute. Let me clear my throat. Okay, so you might want to target owners that are owners of condos that are more than 15 years old, because they are not likely to get so much returns as before already, and the optimal growth stage is no longer there. So get out of it, go into something newer, so that you can still ride the growth in your wealth. They make money work for you, don't just work for money. Okay, so surprisingly though, there's a segment that goes up a little bit. Okay, in the 30 to 40-year-old condos, 99-year condos category, this group of condos, right, appreciated more than the 20 to 30-year-old. And likelihood because this era of 30 to 40-year-old condos, right, they were built without optimizing of GFA, and there was a significant master plan changes where the plot ratio increase, height increases. So there's en bloc potential. That's why especially you see the spike in which years? You see the spike over here. Okay, in 2010 to 2011, when there was still an en bloc boom, and then you remember the en bloc boom of these years, 16 to late 17, there was en bloc boom, right? So prices climb a lot during these areas when there's en bloc boom. Otherwise, then it's likely to go into sleepy mode. Means it doesn't really climb in prices. Okay. Yeah, this is wait, let me see. Let me see some questions that you have. Okay. Okay, this should be based on your lease start date. It should be based on your lease. Oh, sorry, based on your not lease start date, TOP date, because all these are 0 to 5 years, 5 to 10 years. These are all from their completed age. Okay. Okay, for Eileen, well, some people love the home that much, right? Then and they're gonna stay in it forever. They don't really mind losing money, just like some owners in Tiong Bahru. So, well, as long as they're happy. You can warn them, but if they choose to go ahead and they're happy doing so, right, then so be it. Okay, between 2010 to 2020, again, the recent 10 years, what we saw is this. From the 11 to 15 year, this is the best growth period for a condo. 6 to 10 year is the second best. 16 to 20 year next, and then lastly 0 to 5 year. So meaning don't hold too short. If you're going to buy anything, tell our clients don't hold 0 to 5 years from TOP. It will be too short. You will not make money. Second, if you hold beyond the 15 year, you also will make a lot of money. So either you want to hold between 6 to 15 year, or you sell way longer, 30 to 40 years later. Okay, given of course that 30 years, 40 years later is provided master plan rezone everything up, buildings become 60 stories, and there's a lot of intensification use. If not, then it will be a pity, right? It will be a pity that you hold on all the way and then you get nothing. Thank you very much for saying my slides are very good. I spend a lot of time on it, take a lot of time. Okay, so I hope it helps you also. Will I be sending? I will not be sending you all the slides. I'm sorry. You have to download it yourself from LinkUp. So it's in LinkUp under property wealth planning under direction, if I'm not wrong. Yeah, it should be already there. Takashi, I told him already to upload it. If not, Taka, please upload. Compress and upload, please. Thank you. Okay, so I'll just pause for some questions here. Daryl asked, for a buyer who wants to buy resale, okay, what is the age range to enter? Since you can't count based on TOP, I would encourage them to don't buy anything more than 15 years old. Okay, don't buy anything more than 15 years old. To be safe, you really want to be safe from the land start date, 10-year start date. Okay, then for 30 to 40 years, the price per annum is based on average right over 30 to 40 years. Okay, no. How this chart works is it measures condos in the past 10 years that are within 30 to 40 years old. So if, for example, in 2010 is 40-year-old, okay, it will fall under this this chart. But if in 2011 it becomes 41-year-old, the results are no longer taken already, if you follow what I mean. Okay, it has to be within 30 to 40-year-old within this span of 10 years, so that we make a fair judgment. If not, if it's like 40-year-old in 2010, by 2020 is 50-year-old, then it no longer falls under this study anymore. Okay, but there are not a lot of condos that are 40 to 50 years old. That's why I avoided putting it in. Thank you so much, Taka. Okay, so with these two angles, I'm sure you can find a lot of sales opportunities to talk to people, not just for your own pocket good, but also for their good, because they have to realize that holding on does not equal long term, does not equal en bloc will go through, does not equal to your money will appreciate more. And you should be out there warning them about this. Yeah, and I think this angle isn't so used yet in a lot of whether you're doing online marketing, Facebook, digital marketing, or what. Then I'm sure you can find a certain good angle to do it. You can put it in an ebook format, let people download, capture the email, do webinar if you want, and Facebook ads if you want. Okay. So other than that, of course, next year, if you're not working on this approach of advising and getting clients to sell and buy, then of course the evergreen market will be HDB upgraders. Okay. So in this list, right? Actually, in August, I gave you all this list. So in August, we also had this list where we know when the estimated MOP date is. So those in 2019 might not have sold yet, and these are the estates that you can go and focus on. Send your mirrors to, or once it's open for door knocking, you can also go and door knock, share with them your insights about the market, what you should upgrade, and so on. Okay, every engagement gives you a chance. Okay, check link up for the full list of our projects. The source is actually from Theo Alida at the bottom. I have indicated there. So you can also go to his site. He's a very good data guy. So he collects all these that we can use. Okay, and then of course there's also some launches that were ready in 2015 and 2014. By now is already MOP. So you can also target them over here. And lastly, this one in 1617, because they go to 16, those they are ready in 16, right? They are going to be MOP in 2021. So you want to work on them earlier. So some people are looking for answers. Some clients I have, they look for me 1 year in advance to talk about it. Some of them 1 year in advance are trying to appeal to get a unit sold earlier before everybody comes onto the market. So you would want to have your Facebook presence, your ads presence, your flyers, all out to them before a lot of agents are to zoom in there. Okay. Now can door knock or not? By right cannot right? I think can but just that people don't like it at this point. It's still it's not the right time to do it now. So if once open you should go all out already. Yeah, but I don't think people are resuming it now. Okay, it's not entirely stopped. If I know you is it phone cannot I don't remember there being a rule saying that you can't go door to door knock now in phase 2. Is it cannot? Yeah. Anybody care to share? Please share in the chat group. All right. Okay. Still cannot. I called CA cannot. CA everything also cannot. Okay, that's your thing. Yeah. Okay, so cannot. Anyway, MOP executive condos you can still target. And these are the ones that have average growth. They are also shared with you all in August, but let me recap in case some of you came on board later. So those MOP ones with a good average growth of like 17, 20%, 30%, right? These are the people who can buy. They may not necessarily need to sell. Someone just has to go and talk to them and tell them, you can sell and upgrade, buy something else. Or if you still want to stay there because your kids are young, EC owners, a lot of kids are young, then you can also do this, do an equity loan, do a decoupling, and then buy under your wife's name. Or do an equity loan, and if you draw out enough cash, and with some of your savings, you can buy under a trust for your son or daughter. Okay, so be the one to reach out to these owners to share with them the possibilities. All right. Okay. Top TOP projects coming up in 2020 and 2021. I think self-explanatory. Okay. Do your own targeting. Leaders, you also want to share with your guys the different ways that they can do, blasting, whether through the amicus, BUCD, SMS blast. Yeah, you have to do the various ways. Or attend William Tan and William Lee's Facebook marketing. They teach you how to target exactly the owner of a certain area. Okay, so learn from them at a cost. Flyer at doorstep, I think can. I don't know, Font, any input? Okay, so I won't cover this. Also, similarly, TOP projects, a lot of TOP projects attaining ATOP, so to work on. Now, I want to repeat myself on here, okay, about the highest investment potential projects. 4 factors that you should use if you're serving a buyer and then you want to find angles, right? You need to have a certain sales angle, certain sales pitch, so that you are able to convince them to buy into a certain investment. Then these are the 4 factors, PPMH, okay? So what are the 4 factors? You might have heard me before. Let me be a broken recorder, okay? So price per square foot, is it one of the lowest in the segment? Okay, if it's one of the lowest, good. You don't want to be buying at the highest per square foot in the area if within the same district. Okay, profit margin of developer. Is the developer making less than 20% profit margin? Ideally, okay, because it's still considered low. If they're making 40, 50, 60% from you, then yeah, a bit sad lah. Yeah, but sometimes no choice. It's going to TOP soon, then it went up in price already, right? And then sometimes people will still buy it. But of course, preferably developer make less so that you can make more. But is it within 10 minutes walk to an MRT? Because people are getting lazier. Okay, so 10 minutes walk to MRT is one from a study, 60% of people are okay with it. Okay, so you want to sell, you want to rent, it will be way easier in the future if it's near the MRT. Hotspot, is it located within a growth hotspot? You can go to URA, look at where are the growth hotspots in Singapore, and if you can buy into an area where the government is also pumping a lot of money into building, right, like Punggol Digital District, like Woodlands, Bidadari, or Greater Southern Waterfront, or even the Beauty World area, right? If you can you put money there, you will grow with the tide. A rising tide floats all boats, so you want to be there. Okay, if you're not familiar with what I'm talking about, please go and do your own research on URA's website. Okay, sometimes you ask me things, I tend to tell you, please go and Google. Yeah, please don't take me as being rude, because it's really, I mean, literally, please go and Google so you get the answer. And you don't have to rely on me, because being resourceful is very important for a salesperson. On the go, you can get answers without relying on your asking someone else. And whatever you study yourself, you retain better also. Okay. So TOP projects within growth hotspots. This is also in the slide deck, and also sent you all weekly for quite a while already, or almost weekly. Some weeks I'm super busy, I didn't manage to do it. But you can see this row of growth hotspot in blue, right? Whatever is near a growth hotspot, whether it's something as minor as an upcoming MRT or an interchange to a whole estate and innovation district, right? It's good, both well for their projects in the neighborhood. So if it's in blue, right, likely they are, that means the more blue you see, the better for a project lah. So obviously you can see affinity here is walking distance to MRT is $3, no, 3 minutes, sorry, somehow it became formatted wrongly. Okay, estimated average PSF is one of the lowest on the market now. 17% developers profit margin below 20 is good. Upcoming MRT is also good. So if you got 4 boxes instead of 2 boxes, I consider that good. Okay, the more blue boxes, the better. Yeah, so you can use this angle to share with your clients how you study the market. And all these files, right, unfortunately for now, is still on Google spreadsheet, but Jason Tan is working overtime to put it into LinkUp so that you all have access to this and you can sort it by yourself, okay? So give us a while more on this. Next, growth hotspot. We have growth hotspots in the Greater Southern Waterfront, in Bidadari, in Beauty World. These are still hotspots for a while. Okay, so make sure that you are sending people to these areas to buy, because certain projects are having very good discounts, like Cambridge, you see, Cambridge 7.2% developers profit margin, 10 minutes walk to MRT, Greater Southern Waterfront as part of the locality. So this is a very good project to invest in also. So look for Daniel Chan, okay, or the many of our colleagues in there. Okay, so next we have 10 minutes walk to MRT. Like I told you, 10 minutes walk is always preferred, easier to rent out, easier to sell. So we have in a list sorted by walking distance over here. 1, 2 minutes walk. Okay, you can refer it on your own. Okay, or those 3 minutes to 6 minutes walk and so on. Okay, I've also updated the list for you. The last round was the same thing, but we updated this time round. Okay. And then sometimes clients like to know which developer make the least from them. So this is a good sales angle. Doesn't mean that the least profit margin means the best buy. Like Midwood 1.8% profit margin does not mean it's naturally the best buy. Okay, there are a lot of different factors, but this is one thing that gets people's attention. Okay, so you can see Garden Residence 7.1%, very good. Okay, very low developers profit margin. You can see what else? 4th Avenue 5%. Okay, you can see here what else are we in Cambridge? I covered already. Mayfair Gardens, Mayfair Modern 7.2%, 8.3% profit margin. Low profit margin ones. Okay, so push those first if you can, and then of course let me see. Bidadari, I'm not sure that's still 1911. We might have to update that again. Takashi. Okay, so 10% profit margin. So you can also shortlist by this. Basically, sometimes you have to give clients things to filter down what they want. Because if you don't know where to start searching from or advising them from, they also don't know how to start searching. And then, the blind leading the blind, you forever be going around in circles. Okay, next. Okay, also developers profit margin. Everything here is below 20% within this category, business profit margin. Okay, below 20%. Okay, freehold condos with lowest PSF. Park Como, lately we also know it's one of the lowest PSF around. And then we can see that means freehold new launches 1,005 upwards easily, nothing lower. Okay, all the way to Foret 1,009. You see Gazania 1,009 plus. So freehold is going to be pricey. Okay, freehold is priced sought after lah. That's why they always have a higher PSF. Lowest price CCR. Okay, the lowest price right now. Did I sort by average payment? Yes, I did. So the lowest price right now is 4th Avenue. It's 99 years, no doubt, but it's 4th Avenue lowest PSF. And then followed by 5 Derbyshire. Copa is still considered low, so you can bring clients there if you want. Okay, Copa. Okay, where else? And then we can see all the way up to here at Holland. Okay, here at Holland is 2,600 PSF. Okay, the lowest to highest. There are higher ones, of course, but we just keep it to this very short list. Okay, lowest PSF projects in the East. Treasure Tampines is the lowest, all the way up to Infini at East Coast. Okay, the East side list, there are once again the Amber Park and so on, the more pricey one because it's a better neighborhood, higher end project, right? That's why. So, but it's not inside this list. So West side lowest PSF. Okay, I will just keep all these. I'll let you all go through it yourself already because you more or less know what I'm going to say. Okay, lowest price in the Northeast. These are all the main clusters. Remember, all these angles, right? You can put up ads. Don't put the whole list of projects on Facebook because then nobody will look for you. You put up all the information, they get the info, they go themselves, right? What you want is to put up the artwork. So please go into our NAVIS learning group, the board, and create your own artwork. Put it inside your WhatsApp business. Okay, put inside your Facebook, do ads, put on your website, send out to clients and so forth. Do all the things you need to do. Okay, because the artwork is done for you, copywriting you got to do some work, but all the answers are also there for you really to engage them. The more fishing rod you put into the water, the higher chance you catch a fish every day. Okay, so put in all the different types of angles so that you get clients. All right. Okay, next. How to identify projects that stagnated, properties that stagnated. Also a sales angle for next year. I mentioned earlier on, it was also the time, right? That means you hold beyond 15 years, it's likely to grow less. So when it grows less, then you want to get out. But how about other attributes? Okay, what are the other things? These are the 4 factors hard that I harped about the last time, but now I'm going to repeat a little bit. Okay, so hotspot. Once again, if it's not in a URA hotspot, then this property likelihood of a chance appreciating is lower than something that is in a URA growth hotspot. Age, is it older than 15 years? If it's older than 15 years, then it's likely not to grow as much as before. Okay, rentals, are rents steady or declining? If it's declining, then you might want to get out of something that's declining. Rents declining typically have a few reasons, right? Because probably the estate is not well taken care of, or the overall maintenance is not so good, or there are other reasons that affect the rent there. So if rents are declining, it's also another indication why you should get out. Okay, price trends, are they growing or stagnant? In the next few quarters, likely price trends are going to grow, right? Because I told you so many reasons why it's going to grow. But if in the next few quarters you see that, hey, this particular property, the price is, everything going up, but this guy is all sideways, then obviously this property has a problem. Probably it's time to get out. Okay. Sometimes the problem can be, very obvious. Sometimes it's not obvious. Could be a very high maintenance fee people really don't like. Could be a very bad layout that unless you step in, you don't know about all the maintenance. Okay. So these are the 4 factors. When you talk to any clients, right, and you want to know how to advise them, should I advise them to hold or to sell this property that they have? Then I'll always go back to these 4 factors. Okay. Then I can always have a framework. The framework is what I want to stress. With a framework, you can easily apply and meet many clients. Different type of clients, you have always this framework to rely on to make sense. You don't just depends on your mood, or depends on your own gut feel whether you should sell, because then you don't make sense and people sense it. Okay, so remember this. Now, I just want to recap the fundamentals before we end the session. Very good timing. I think I'm ahead of time. Okay, a property market recovery is already in progress. Okay, and these are some of the things we have to recap so that we understand, and we can also share with our clients. Some people are cynical, and the more points you have, the more you're able to educate them and let them be convicted. Okay, number one, once again, this time around, even with the very severe correction in the market, right? Very bad sentiments, confidence, very bad. We have seen how growth outweighs correction. Okay, the correction was nothing, almost nothing at all. Even the last round in the GFC, right? Global financial crisis, it was so much worse. Okay, so much worse. Prices dropped so much. This time round, it didn't drop much at all. Okay. So fact number one. Second thing, steadily decreasing unsold supply. Throughout these few months, we have seen that units have been constantly sold. Developers are were dangling good discounts, now reducing discounts, upping price already, right? Standard one, because why? Confidence is coming back. That's why they're also bidding for land, and they are retaining as much as they can their units. Let it sell slowly. Sell too fast, they're also not happy sometimes. Sell too fast means they're underpriced. So developers have unsold supply steadily reducing, and most of the supply is estimated to sell out by 2023 to 2024. Okay, if you remember back then, in I think the start of the year, I also shared with you all where I see the crystal ball of en bloc happening, right? I see it happening around the magical number is about 15,000 developers will start to replenish, because the last time around 15,000 mark, they start to replenish. Unsold supply, 15,000 mark, somewhere here. Okay, sorry, somewhere here below. Okay, so where are we now? And are they starting to replenish? Obviously they are. Okay, now we are somewhere here. I think we are somewhere at 25,000 mark. Okay, now at 25,000 mark to 15,000 mark is 10,000 units. Okay, and every year, averagely, this year we are slated to sell about 9,005 units, right? If you look at the analysis by Christine, so far it's probably about 9,500 to 9,800 units, if I'm not wrong. So by next year, we are looking to clear this, another 10K of it. Means that next year inventory will be low, 15,000. The last time round, this was a psychological barrier for developers to come in and buy a lot of land. Okay, I can tell you this time round, a lot of developers are smarter already. They won't start to buy only when they drop to 15,000, because last round, Oxley won a lot of land ahead of all the big boys like Capital Land, CDL, Hong Leong, and everything. Oxley come in and boom, took a lot of good land at cheap prices. So these developers have learned a lesson. You don't wait until 15,000 plus. You better come in to buy and bid for land at the 20,000 mark or 18,000 mark or so, or some of them even starting now already. Okay, so that's why I see that en bloc is coming back strongly in 2021. And remember, you heard it start of the year. Okay, a lot of different all the Huttons and everything, they came out and only recently talk about this thing. But ahead of time, we were already forewarned that the market, okay, is much healthier and a lot of upside potential than than what we saw during COVID, than what we were confident of during COVID. Okay, number three, remember that government is delaying land supply to moderate supply. Obviously, they are cutting. They have been cutting GLS supply. They also gave a longer tender period of 6 months, so that developers can take their time and bid for the land. Okay, and be more confident before they submit any bids. So what does this mean? When they are holding supply, government now face a conundrum. What's a conundrum? They cut GLS and then they see, wow, so much demand. And then they see, wow, now the prices climbing up again. Then they want to release more land supply, right? Because they don't want this bubble to form again. And there's people starting to fight for land and increase prices. And then prices increase so much beyond fundamentals. That's not what they want to see. They want to see a very steady growth together with income. Okay. So now the conundrum. Let's see how they will react in a few months' time. Likelihood the next land release, right? Private housing supply release, they will release more aggressively so that they allay developers that, hey, don't worry, don't have to fight for, don't have to be too aggressive in bidding, or don't have to be too kanchiong, okay, to unblock a lot of private sites or what. Just wait and we'll give you enough land supply. Yeah, because they control the ultimate raw ingredient for developers. Okay, fact number 4, strong interest. We have seen this already at recent government land sales. I want to remind you, okay, all these news articles are perfect for you to share with clients, to share on social media, and then add a short, description about what is happening in the market. This will help people to know and remember you are in the market. Okay, remember, it's your job to remind people you are an agent, not your friend's job to remember that you are an agent. Okay, so oops, what happened? Drop off. Let me just share again. Hang on. Just a minute. Oh, I got locked out, I think. Okay, just a minute. I'm back. Okay. Okay, so remember, it's your job to let people know you're an agent and be always there to let them know. Yeah, it's not your job to remember. Okay, need to see your face. Yeah. Okay, so there were two very high bids, right, for Yishun side and Tanah Merah side. So all were very bullish, and this shows that developers are coming back strongly. And guess what? Out of the list of like 14 or 15 people who bidded for the land, how many won it? Only one. Okay, only one won it. And if only one won it, the rest of them are still hungry, right? All these yeah, a lot of people are still hungry for land, and sorry, a lot of developers are still hungry for land and will be fighting for the next bid and the next bid and the next bid. And for some of them, yeah, for some of them, they sorry, at least you got to switch off your mic. Yeah, because the background a bit noisy. Okay, so for some of them who missed out on all these GLS, right, they will be turning to all the en bloc collective sales and are already negotiating. A lot of collective sales are going on already. So you will likely see the news coming up again in first and second quarter 2021. By then, all these news come up, too late to buy already. Not too late lah. You'll be wasting a lot of money lah. So get your buyers ready to go in ASAP, okay, or yourself. Okay, en bloc interest reigniting in 2020. Guillemard site sold 93 million, the largest private residential deal this year. Earlier on, there was a very low-key sale of Yuanxing Mansion in Geylang, okay, already sold, okay, and then there was also Casa Sofia, also sold, start of the year, okay. So actually there was some en bloc going on. There was like, no, it's not like very quietly, nothing go on. There are some en bloc already going on. And you can see in the small print, right, Green Court in Geylang also launched for en bloc sale. This time around, seems like Geylang is seeing a revival of small developers. A lot of China small businessmen come in here and want to be a developer, right? So they're buying those small plots like that. Tivoli Lodge also in Geylang up for collective sale. Advanced Apartment also up for collective sale. There are a couple more I didn't put all in. Sigap Shopping Centre going on for collective sale. Maxwell House on collective sale. Then a few more here and there. Okay. 3 landed homes in Telok Kurau that can build the apartments also on collective sale, and more coming. Okay, these people they won't just put on collective sale if there was no interest in the first place. Very likely already developers have been talking to them to, hey, you go and form a committee and then come up with a reasonable price and proposal, and then we come and tender for it. Okay, and then whether they can meet expectations or not. The committee will suddenly just sprout out of the blue and do a collective sale committee. There must be interest already. Okay, so whether it go through or not, we'll see in about 2 quarters time. For those of you who have a focal point on Geylang, Kallang, Geylang area, with this revival of small developers, right, interest in the area, is a very good time to do a GTA on that space, because if you can get to know them now, okay, pitch to them that you can, because small projects are 30, 40, 50 units, they don't need a big company coming in. Some big companies don't even want to pick small projects. So you can even pitch it on your own and go and get it if you are good in that area. Okay, start to take on more challenges also, and it can be quite lucrative. Okay, fact number 6, no oversupply issues. As you can see from the dotted line there, 13,855 units. This is the average annual supply in the past 10 years. As of the most recent release by URA, right, 2021, we will have only 7,300 units, about half of what is needed. Or what, not what is needed, what is the annual supply. In 2022, we have about 11,000, okay, still short of annual supply. 2023, a little bit more, overshot a little bit, but not much. Okay, just making up the shortfall. 2024, also overshot by a little bit, but still below what is missing in 2021 and 2022, the averages. And then, of course, 2024 and beyond, we are not seeing anything yet. So remember that when you do any block or GIS, and then you want to build a piece of land up, right, to TOP, it takes about 4 years to, about 4 years lah. Next 5 years in this market, maybe 5 years, okay, 4 to 5 years. Meaning beyond 2024 right now, we have only 2,800 units. Very massive shortfall. So any developer in sane mind would know that, hey, if I bid for a piece of land in 2021 and it's going to be completed by 2025, right, or 2025 or 2026, I can safely go and bid for it. Because even if first 3 years I don't sell fast, the later 2 years I can sell. Why? Because there will be a shortfall by then, right? So if you look ahead of time in the crystal ball, this is 2022, this one will be 2025, 2025, 2026. Okay, this period, there's a shortfall. There's a very big gap, a void of units. So even if I bid for land here and I don't sell out well in the 1, 2, 3 years, very sure these 2 years can sell. Why? Because super shortfall. Yeah, so developers, if they do their sums sufficiently, and they will see that, hey, there's a very good opportunity now to be aggressive competing for land. Okay, that's why I think a lot of them also did their sums, they will know. Okay. Yeah, so no oversupply issues. Undersupply issues. Maybe I should retitle this. Undersupply issues. Okay, high average occupancy rate of over 93%. This is still high considered in the past. In 2016, we had almost 9% of vacancy. Now we are only 6.3%. Okay, so you can see here the high point was here in 2016. Even then, did we see a 9% vacancy rate? Did we see the market dipping? No, right? Because in the fourth quarter 2016 and the first quarter 2017, we saw prices climbing back up. Okay, so even 9% vacancy rate is no big deal, because at that point, market started to climb back up. So now where we are, we did see an uptick because of some foreigners going home, and then there are no replacements at this point for them, for newly employed foreigners. Not many coming in. So at this 6% plus mark, there was an uptick, but then it's still not a lot. So don't worry about that, okay? Fact number 8, okay, our dear Lawrence aged a lot over this 1 year, I think. Construction costs will be higher, okay, and it's already been announced. You can see in underline, I have no doubt construction costs will be higher, okay, because of regulatory requirements. So costs will increase, and costs increase, who pays the bill at the end of the day? It will be consumers. Okay, so whatever in the market right now, those developments, they are priced to sell at below 20% profit margin, right? They were still on old costings, meaning their construction costs did not increase. Okay, and they would likelihood when it's selling out better, or probably in a few months when the market is a lot more confident and bullish, they will increase price to account for all these extra costs of construction and regulatory compliance. So what you really want your buyers to do now is to go for whatever is there on the market that's been launched for a while. Those are a lower profit margin for developer and likely put a higher profit in the future for them compared to the future new launches. Okay, fact number 9, also want to repeat that low interest rates visibility likely to stay through all the way to 2022, but more likely to go beyond that. Reason being, if you remember in the last round I mentioned to you all, in GFC, it took 10 years to recover to 2% interest rate. 10 years. Okay, this time now in 2020, COVID is worse than is so much worse than GFC. It's going to take a long while before we even climb back to 2%. So you should do your best to take as much leverage as possible to buy the biggest property you can afford to if you have good income or a visibility of your safe income. Okay. Okay, Kenny, the balance is 25,000 plus. You can research into one of the articles recently released in the news. If it's 15,000, it's a frenzy already. Okay, so fact number 10, Federal Reserve inflation targeting. Let me repeat myself also on this because it's very important. US is still the big boy in the world, okay? They are still the #1 in the world, regardless of what we say about China's rising. And they have announced inflation targeting to be more than 2%. Okay, they're going to target above 2% so they can hopefully land at 2%. Because in the past history, right, they always target 2%, they never hit 2%. It's like you aim your annual income 500,000, then you always land at 400,000, right? So this time around, they want to aim higher so they can land on 500,000. Okay, so this time around, they have made it so known all over the media. And guess what? When US targets above 2%, slowly the world follows. Okay, it's only about time that the world follows. Europe now is contemplating following them. Okay, contemplating following them, and then other areas in the world, developed countries, will likely follow that. Why? Because when they keep printing money and their currency keep dropping, right? USD against Sing dollar has been dropping, by the way. If it keeps dropping and dropping, suddenly US people won't go and import their goods because other people's goods and services are going to be too costly. So these other nations will also have to lower their currency, or lowering the currency means inflation, inflate their own costs, or they inflate their own currencies. Okay, so very likely this is something that will resonate throughout the world. Okay, it takes time to flow through. Okay, but it will come around, and means that you want to be holding assets. Okay, so this is a 10-year comparison update. Okay, I'm reaching the last slide already. So well done if you are still with me. Okay, updated on 11 November. It's a 10-year comparison of the performance of different instruments. Okay, Singaporeans typically invest in. Okay, so Singaporeans typically will buy what? They will buy ECs, condo, landed, gold, CPF ordinary savings. Okay, they will put money inside. Okay, fixed D, HDB flats, Singapore bank account, or they invest in the Straits Times Index. Okay, I didn't go into separate stocks like DBS, UOB, Wilmar, and all these things because then it will be very hard to know exactly what you invest in. But across the board, if I debased everything according to, if I had 100,000 in 2011, and then my returns are in 2020, how much would my capital have grown till? Okay, the best returns so far, top 3 in bold, all in bold are property. Yeah, top 3 as you can see will be EC, condo, landed, and then gold did well significantly recently, CPF, then and so on, and then finally HDB flat not doing very well. Okay, the returns are much higher still for property, and we are very fortunate, and we should be counting our blessings and enlarging our blessings by buying the biggest we can afford. Okay, so use this whichever way you want. It helps me to convince people very easily with one slide. I tell people, you know what you should do, upgrade lah, like that lah. Okay, all said and done is all numbers. Okay. Okay, I'm going to close with this, and then there's one small favor I ask from you. Okay, that one small favor, I hope you'll do it for me. But let's finish this first. I will end with this. Asset inflation is as certain as death and taxes. It's going to happen. It will happen. Mark my words. I hope you are vested as well. Don't just hold cash in your bank and not do anything. You will be the one who regrets being vested and enjoying the surge. Okay, as we have witnessed, to combat COVID, right? The world is using money printing as a solution, other than, of course, doing a lot of other stuff like rescaling their people, developing a COVID vaccine. Money printing is still a solution. Okay, governments are giving out monies across everywhere, and that's why Bitcoin, this type of artificial currencies are gaining also, because people are realizing that, hey, wow, money can just be printed like that. Then what is its worth? So don't be holding on to something that is going to cost you a guaranteed cost of 2%. And then why 2%? Because inflation is going to be 2%, meaning your money is going to be smaller and smaller every year. Your copy is going to be more costly. Your tuition fees for your children are going to be more costly. Your transportation, your petrol, your car in the future is going to be more costly. So please don't put so much cash inside your ATM, inside your bank account. Put money in something else. Okay, put money in the stock market, put money in the property market, put money in the REITs. Certain REITs are really undervalued right now, so that you too are not going to just work for the rest of your life for money, but have money work for you. Okay, so this is my parting shot. As I have a request from all of you, this is my request. Okay, now that you have a macro picture, a bird's eye view of what's happening and a horizon that's coming up in the next few quarters, I would like all of us to, since you already have the knowledge, please take action. Okay, you can go to LinkUp right now. Okay, in LinkUp, screenshot the part or download the slide deck that I just shared with you. Use whichever part you want to take action, to post on social media, on your LinkedIn, on your Instagram, on your whatever. Okay, WhatsApp your friends, follow up with your clients. I would like you to at least follow up with 3 clients today. Okay, today, why today? Because if it's not today, then you won't do one, I know. And also it's fresh in your mind. Whatever we just said, we just covered, it's fresh in your mind. Do yourself a favor. Do me a favor. I don't want my effort to be wasted, that it just ends up with your ears. Okay, so go and share something, whether it's the last slide, the second last slide, or whatever thing along the way that you can think is resonating and helps your friends, right? Send to them, and then go for coffee, and then make something happen. Okay, so that's all for me. And then hope you do it. Once you do it, right, let me know, or just if you're in the team builders chat, just update each other. If you have any results, anyone engaged, and then you're meeting up or you get a sale from it, let us know also, because your results will inspire the rest of us to take more action. Okay, and it's very important we keep this community very positive, very action driven, and we share our testimonies so that we encourage each other along the way. Okay, it's getting more and more it's getting harder to see each other, so the least we can do is just to inspire each other. All right. Yeah, so which section of LinkUp is it in? Thank you. So which section of LinkUp is it in? I think it's above. Yeah. I think it was shared above.
Market direction 20.
Market direction. Okay, yeah. It's in LinkUp e-sharing market direction 2020. All right, guys. So that'll be all from me. So thank you so much. All the best, guys. Yeah, wherever you are, take care, be safe. Go out for walks a lot, okay? Don't just stay at home. Don't just keep indoors all the time. We need to keep ourselves mentally healthy, physically healthy, so that we can run the longer distance. Okay, I hope things open up sooner so I can see you all in person for our trainings and everything. Right? Otherwise, nothing else further. Okay, signing out. Bye-bye. See you all.